Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this video is general only, so it is tailored to your particular circumstances and you need to decide for yourself whether it's appropriate to you. Okay, so with about 40 minutes of trade left, our market is just hovering around the 7300 level. There is a bit of a resistance or support level through here that we're holding intraday at the moment. Okay, so you can see that we use this level back here. We hugged this 73 level for a while back here as well. So that seems to be resistance for now. Okay. Since we spoke last, the market has fallen down pretty aggressively and held the 200-day moving average and the key level of support at 71.88. The pullback was obviously caused by the new variant Omicron. We'll talk to that a bit more in a moment, but nonetheless, at this stage, we're seeing the selling being abated for the moment as we await a bit more information. Now, technically, guys, the uptrend on this market is still intact. Okay, we're looking for confirmation of that trend continuing at this point of time. There is a few alerts that I must say through here at the moment. One is you've got a head and shoulders pattern starting to play out here. Okay, so you got the head, the left shoulder, the right shoulder. We haven't broken the neckline though, and this pattern is only interesting if it breaks the neckline. We only look at it and really pay a lot of attention to it when that neckline is broken. If it does break, what the pattern is suggesting is that the XJO could go as low as 67.50, 67.30, back to around these lower levels of support through here. If we were to see a big correction in the market, these levels would make sense. We spent a lot of time around that 6600, 67 level going sideways, and if you go back before COVID, we also spent a lot of time around these levels. So if we were to correct like that, I wouldn't be surprised to see sort of 66, 67 hold something around there. Nonetheless, look, there's a bit of volatility around. I suggest there would be a bit of volatility to continue over the next few weeks, but we tend to then sort of shrug things off pretty quickly mid-December and start running into Christmas. So that's your typical seasonal pattern. Now, if I get across the S&P 500, you can see there they've had a sort of similar reaction, a big pullback on Friday. That pullback Friday was done on low volumes. It was, I think it was 2 or 3 hours of trade, being Thanksgiving holiday. So, they pretty much bought up most of that sell down last night. The futures at this stage are still pointing slightly in the green. Okay, I still feel there's going to be a bit of volatility here. I still feel that we may see that 45 or 45.50 type level through here tested at some point in the coming week. Okay, there's enough uncertainty around this Omicron variant. All it's going to take is a little bit of bad news. The media outlets to spin things in a negative manner, and we could see a quick flash sell down again. So I'm still on the edge, guys. I still think the market's on a bit of a knife's edge here, and we just got to wait and see whether it, that was it. Is that our pullback, early December pullback, and we're going to rally into Christmas now, or is there still a bit more to come? If I look at the VIX index, guys, volatility is still quite high. You got volatility above 20%. Volatility above these levels can sometimes indicate a little correction. Okay, 5 to 10% correction, guys. Okay, so the market did move, or their market, the S&P 500, moved 10% higher from early October. I feel we need to give a bit of that back before we're going to continue higher again. That's just my feeling, and I just don't know whether... I just feel that the downward momentum hasn't finished here. Okay, there's a potential downtrend line, short-term downtrend line that could be drawn. Tonight's going to be the night where we'll get a good feel of what's coming next, guys. Right? I feel we're coming back down towards 45.40 in the short term. Alrighty, so some of the key things affecting sentiment in the markets right now. One is iron ore is rebounding. Okay, we've seen a bit of strength back in this space once again. Vale and Rio have downgraded their guidance now. So Rio back when it had its production report last month, and Vale just this week. So that explains the movements we've been seeing up in iron ore recently. Also, there's a lot more talk around at the moment that China will start amping up their steel production around March next year. So don't forget, markets are forward looking, okay? And these miners are starting to show some signs of bottoming out. Okay, Fortescue's produced a new trend in the short term. BHP is testing a very key level of resistance in which if it breaks, things are looking pretty bullish. So it might be a good time to be considering these miners. Iron ore starting to show some signs of bottoming out. I would be looking to potentially pick up some of these miners here and accumulate more as iron ore continues to climb. I wouldn't put my full allocation on just yet. Not until we get closer to these Olympic Games and see the true trend of iron ore. Okay, so iron ore is definitely something to be looking at. Iron ore miners is something to be looking at right now. But I guess the big news right now is this Omicron scare that we're seeing at the moment. Look, there's a new variant. There's a huge amount of mutations to the spike protein that's causing a little bit of uncertainty on whether the vaccine is going to be effective or not. Okay, so we don't know how effective it's going to be. There's obviously a few vaccines here in Australia as well and around the world. So it's going to take a few weeks to get some testing back. We don't know what we don't know. Okay, there's still a lot more questions and answers out there around this new variant. So, like I said before, all it's going to take is some bad news on this side of things to tip those scales back across. US markets are a little bit overbought in the short term. So this has the makings of a correction, guys. Okay, not to say it's definitely going to happen. We're going to have to see some more bad news for a correction to happen here. Okay, it's going to be news driven, and none of us have a crystal ball to say how this news is going to hit the market. But what the market's going to want to see is one of a few things. One is that the current vaccines are effective against this variant. And if they're not, well, we need to see some very quick promises from the manufacturing companies that they're going to be able to come up with some kind of booster to avoid huge economic lockdowns again like what we've had in the previous years. So the market does not want these economic lockdowns. You're going to see crude get decimated again if that all happens. And therefore you'll see the US financials pull back heavily, and a lot of other sectors like travel and things like that. And then people start moving towards, after all the damage is done, people will move towards the defensives like your JB Hi-Fis and things like that, your staples and that type of stuff. Look, small chance this is going to happen, guys, but it is a risk that we have to be aware of and be ready ourselves that a bit of a correction could be on the horizon if this variant is worse than expected and cannot be and the current vaccines aren't effective against it. Okay, that's the key bit. That's the key bit of information we're waiting for. Alright, the next big thing we've got to worry about outside of COVID is this debt ceiling. We are December as of tomorrow, which means there is exactly 2 weeks predicted by them that they're going to run out of money, right? So yes, the US government's going to run out of money in approximately 2 weeks. Alright, so this also has the makings of a small correction. I say small, I mean 5 to 10%, guys. Look, I'm not expecting an event like what we saw out of COVID where the market fell 50%, right? I would not be surprised to see 5 to 10% pullback early this month, which will set us up nicely for a Christmas rally. Okay, and there's 2 key bits of information here that could be the catalyst to cause that to happen. Don't get me wrong, I'm getting ready to buy the dip, guys, right? I'm 100% here, ready and waiting. If I see some confirmation, we'll start buying into the dips. But seasonally, we tend to get a pullback around this time of year. US markets are still just a little bit overbought for my likings, and that's what I'm waiting for, is that little bit of a move. We will hear from Jay Powell this week, although the Fed Reserve is not due to meet until about the middle of the month. Okay, but it'll be interesting to see what they have to say, especially with this new variant that's come up. They want to hear some nice cushioning words from them. Perhaps they'll suggest that the tapering might be put on pause next year if this variant ends up being a problem. Okay. I don't know. Let's just see. All right. I'm sure they're going to be fairly accommodative as they have been throughout this whole process. Okay, so just to summarize, short term, I'm probably a little bit neutral to bearish, guys. Okay, so sideways to bearish in the short term. Long term, still bullish. I still think there's a lot of positivity out there, but on high alert, there's a bit of volatility there. The VIX is high, and just waiting to see how this new variant Omicron is going to play out and how the market's going to react to that. Okay, that's where we're at. So, all right, thanks for listening in. You take care, and bye for now.